So is there really a mortgage rate war going on with the banks? Like, I know if you're Canadian, you got a love-hate relationship with banks, right? Like when we kind of love our bank, oh, the bank got me this loan, or the bank got me my mortgage, or the bank, I feel great trust in bank XYZ. And then, of course, when the bank does something we don't like, God damn it, I hate these banks. I mean, the bank is terrible. They're always grabbing money. They're way too profitable. They're always against the people, blah, blah. Okay, so we got to face facts. That's the way we think. It's inescapable. But this was a statement made by arguably the top CEO in Canada, top bank CEO, Dave Mackay at RBC, and said, there's a mortgage rate war going on in Canada. Like, we're not making any money on mortgages. He suggested that they were making 75% less profit margin on mortgages than they'd had been in previous years. So again, there's a whole ton of people out there saying, yeah, bullshit. Okay, but let's examine it. Rates have come down a lot, and banks are extremely aggressive about holding on to customers or bidding on new mortgages, typically a new mortgage for a purchase of a home, okay? I'm talking about residential mortgages now. Hey, there are 3.99 rates for high ratio, 3-year. High ratio is a CMHC mortgage. You pay the insurance premium. It's down payment's less than 20%. House is less than $1 million purchase price. But for those particular mortgages, 3.99 5-year fixed. I've seen 3.99 3-year fixed. The bond yields are down, as we've said many, many times. The Government of Canada bond yields are what drives mortgage rates in this country. They are down, but this is like the banks are so years ago, it was slow. Like the yields would come down, maybe a week later, 2 weeks later, rates would drop. There's a discretion. There's something called discretion in rates. That's what they decide to offer once they have a look at the mortgage. In other words, there's a published rate, which is the current rate. There's a posted rate, which is used to calculate penalties when you break the mortgage. And there's the discretion rate, which is what people on a pricing desk look at and say, yeah, this is a great big mortgage, high ratio, closes quickly. Yeah, I think we can offer X. And X today is pretty damn competitive, okay? So why would this happen, though? Why would this happen that the Royal Bank CEO would say we're making less money on mortgages than we have maybe forever? Like, why would he say that? Why would he say there's a rate war? Well, here's the real crux of it. For about 14 years, mortgages just came in. Like there was lots of mortgages getting written in Canada. Like we went through a very low interest rate period. Some people call it ZIRP, the zero interest rate period. So, or zero interest rate program. So rates were super low, not just during COVID when rates went to basically nothing. Like, how in the world can a 5-year fix be like 1.49, 1.59? That's nuts. How can variable be 0.99? All crazy stuff. But hear me out. That's what it was. Okay. So, and it was low before. It was low before COVID. So rates were so low, and the real estate market in Ontario and British Columbia, very buoyant. Very, very buoyant, all kinds of business. And then there was the time of what we refer to as mortgage Christmas. That's what mortgage brokers and bankers and all the rest call the period from about May 2020 through till February 2022. Mortgage Christmas. Like so many houses sold, so many refinances, so much business. It was, you couldn't even keep up with it. It was so busy. There was so much real estate action, so much mortgage action because the rates were so ridiculously low. So business came in like crazy. Business was pretty good for the previous 10 years. And why would you really, really compete hard? Let me give you, and let me give you the best example. The best example is about a renewing mortgage. Your mortgage is up for renewal. When you now, if you're smart, and we've talked about it 100 times, at least 100 times, we've talked about it. If people are smart when their mortgage renews, they shop around. They go to other banks. They go to mortgage brokers. They shop the market. They look at rate sites. They look at rate sites like wawa.ca. There's many others, rate.ca, rate hub. They look at rate sites and they figure, wow, these rates seem super low here. they don't always qualify for those rates. But then they make a couple of calls to their banks and other banks, not just their bank, and then they're sort of armed. They're armed and dangerous when they talk to their bank who offers the renewal. Typically, that's about 30 days or 45 days prior to the actual renewal date. And they say to the bank says, yeah, I think we can offer you a 449 3-year fixed. And the client who's done a ton of research, that's why you've got to shop around, says, guess what? I'll take 409 or I'm leaving. Okay. Back when it was Mortgage Christmas and all those other years where there was tons of new mortgages pouring in, it wasn't such a big deal to a bank to lose a customer, particularly about rate, margin before rate. In other words, they like to make their profit. So, yeah, you can go. You can go. But now there's no Mortgage Christmas. It's like mortgage desert. Okay. It's terrible for mortgages. And the banks are actually looking at their book of business or their portfolio of mortgages. There's actually fewer. The mortgage book shrinks because people pay off their mortgage, people sell their homes, and there's not enough new mortgages coming in. So if they start to lose mortgages at renewal, it shrinks more. So the word comes down from the top of the bank. Just match the rates. I know. Try to get as much profit as you can, but we got to stop hemorrhaging mortgages. We have to stop, okay? Now you understand the answer. In a time where there are less mortgages in a year going on the books than are coming off the books, the banks will fight for everything. They'll fight for new purchase. And they say, okay, what does CIBC offer, says RBC? Oh, CIBC offered 414. Well, I'll give you 399. To hell with it. We got to get your business. Because banks also know that when people purchase a home, that's a great time to acquire a new customer, and they might stay with them for years and years and get other kinds of lending and other kinds of products. So that's the answer. Why is there a rate war? Because there's less mortgages coming in. So you got to fight for every dollar.